Hey guys, and welcome to the Working Money Channel. Ripple is on Wall Street, guys. This tweet from Jack the Rippler here on Twitter. Take a look at this. Wall Street, crypto means business, Ripple, right here on Wall Street. And you guys can see all the advertisements have been posted up and are very prevalent in New York City. Impatience is a virtue over here. And you can see Wall Street, it is indeed New York City. Ripple's really been heating it up with the ad campaigns. We saw all the advertisements in London as well. A big financial sector also going to be the home for this year's Swell Conference. And Wall Street, of course, New York City. Look at this last one here. Shift your business into carbon neutral. So we can see where this is going. We can see what Ripple is focusing on. Of course, all these same talking points of a new financial system that the powers that be have been spouting as well. Last phase of the Great Reset? Well, we're coming in very close. Guys, I also saw this. UK lawmakers vote to recognize crypto as regulated financial instruments. So, a landmark decision here. The lower house of parliament voted in favor of adding crypto to the scope of activities to be regulated via the proposed Financial Services and Markets Bill, which already seeks to extend payment rules to stablecoins. So they've already implemented rules with regards to stablecoins, but now lawmakers in the UK voted in favor of recognizing crypto assets as regulated financial instruments and products. The House of Commons, the Parliament's lower house, met on Tuesday for a line-by-line reading of the proposed Financial Services and Markets Bill, which broadly covers the UK's post-Brexit economic strategy. The lawmakers considered a list of proposed amendments to the bill, including to put forward by parliamentarian Andrew Griffith to include crypto assets in the scope of regulated financial services in the country. Adding cryptocurrency, guys, this is going to be a game changer in the UK. Down here, a quote, "The substance here is to treat them, crypto, like other forms of financial assets and not to prefer them, but also to bring them within the scope of regulation for the first time." So wanting to normalize cryptocurrencies, wanting to regulate them the same way and see them the same way we see any other kind of money. Griffith, the financial services and city minister, said during the parliamentary meeting before lawmakers voted largely in favor to keep the amendment in the legislative package. The local crypto industry, which recently welcomed the news of Rishi Sunak's appointment as the country's new prime minister, stands to welcome the efforts to give legal recognition to digital assets broadly. The Markets Bill, and by extension the stablecoin rules, was introduced during Sunak's time as finance minister in the Boris Johnson administration. So on the one hand, wanting to welcome in certain cryptocurrencies for use in broader applications, but also wanting to thwart bad actors as well. The measures would regulate crypto promotions and outlaw companies that are not authorized to operate in the country. So wanting to keep it still a very controlled and very regulated space. But I think they're opening up. I mean, when we're seeing companies like MasterCard and Visa and Amex realizing, look, there is something to be said about payments here. And there are also some other companies too that want one to be able to attach their crypto to a mainstream payment method if it is a credit card or something similar, so that the public can actually pay using their cryptocurrency. This is when it's going to be mainstream, and this is when the real adoption is going to take place. So we're seeing it here first in the UK. Wanted to keep moving because we've got some excellent news from Nexo. For those in the XRP army looking to unlock value from their favorite asset, start earning our promotional rate of up to 12% on XRP and feel the yield. So here we have it, guys. Earn 16% on cryptocurrency. Make your idle digital assets work for you with Nexo. Start earning up to 16% APR paid out daily. Now, this is not a paid promotion for me. I do not have any ties with Nexo. I just saw this and thought it was interesting. I don't want this to be one of those Celsius situations where the company goes bankrupt tomorrow and then I'm blasted on Twitter. I mean, anyway, do your own research. Nexo has been around for a while now. Just looking at some of these coins, look how many of these cryptocurrencies you can receive yield from. So not just Bitcoin and a handful of others, but dozens here. XRP, guys, if you hold XRP for 24 months, oh, and this is a sliding scale here. So if you hold it for like 12 months, let's say, the amount of XRP, $10,000 worth of XRP, you stand to make about $11,000. So a huge return there. For 24 months, $12,000, give or take. And it is a sliding scale. So I will link this in the description of the video if you guys are interested. And like I said, many other different cryptocurrencies as well. But they mention here in this ad, specifically for XRP hodlers. They're probably realizing that more and more people are actually accumulating more and more XRP as this lawsuit is coming to a close. As I mentioned in this morning's video, which I'll link up here in the top right-hand corner, Many more whales have actually accumulated much more XRP in the last 2 days only, and they're assuming because there's so much great news coming out about the lawsuit and a positive verdict for Ripple. I also saw this guy's from Michael Branch, days after signing the second wave of recipients to receive $250 million from the Creator Fund. Ripple has announced that it is opening another application. So this is for developers for NFTs on the XRPL. Ripple is not planning to back down on its quest to support NFT creators building on the XRP ledger. Days after signing the second wave of recipients to receive $250 million, they have now announced a Wave 3 of the program. Wave 3 of our $250 million Creator Fund is now open. This coming from Ripple, according to the announcement. Ripple said the third segment of the program would focus on creators building both physical and digital non-fungible tokens. However, the blockchain company also urged creators in other use cases to participate in the ongoing exercise. Interested participants are urged to submit their applications for review by members of the Ripple team. The deadline for submission is December the 30th, 2022, Ripple said in a statement. So another round, I mean, if it wasn't successful, they would definitely not be doing it. Clearly, Ripple has a vested interest in more development occurring on the XRPL. And so, I mean, they've got the money to support it. Why not run another wave, a Wave 3, a Wave 4, a Wave 5? Let's keep going, guys, and let's keep driving value to the XRP ledger. This is just going to get better and better for XRP hodlers. Every step counts towards future development and future price appreciation eventually for the XRP token when more value is derived to it. So I wanted to thank Michael for posting that. Guys, I also saw this with Ripple-enabled company Temenos. Temenos today announced the availability of a carbon emissions calculator, one of the industry's first giving its customer deeper insight into carbon emissions data associated with their consumption of Temenos banking cloud services. Considering we know Ripple is also on the same page of the environmentally friendly narrative, is it any surprise that a Ripple-enabled company such as Temenos is doing the same? This approach has been introduced by Temenos to estimate its own cloud and SaaS operations carbon emissions. The calculator's methodology has been independently verified by Grant Thornton, one of the world's leading accounting and consultancy firms. The calculator leverages the data provided by Microsoft Cloud for Sustainability Emissions Impact Dashboard Services to report carbon emissions metrics. So just another company here, obviously looking to be environmentally conscious, allowing their customers the ability to track their carbon emissions. Just down here, banks running on Temenos Banking Cloud enjoy benefits of over 90% in carbon emission savings compared to on-premise IT infrastructures. Temenos Cloud is powered by Azure and uses services like Azure Kubernetes services, Azure Functions, Azure SQL, and more. So you can see these companies all partnered with each other, looking at the same environmentally friendly narrative. I will link this in the description if you guys want to read more about that. Just thought I'd bring that to you. Along with this, now this is an opinion paper. I can't really see the logic in it. This brought to us by Matthew Lany. FedNow may stumble without non-banks and cross-border payments. Now we know, just to set it up, FedNow has leveraged Valente technologies, and we know Valente is Ripple-enabled. The benefits of FedNow must be widely available to Americans through competitive, diverse providers, including non-banks, writes a US-based Wise executive. So they're suggesting that this needs to be widely available through many different service providers in order for this actually to work out. The potential for faster payment systems in the United States has created significant interest across the financial services industry and beyond. With the Federal Reserve's announcement that FedNow will launch next summer, recent government reports on the future of payments, and increasing congressional and industry attention, the opportunities for a 24/7 instant payment system are limitless. FedNow is a crucial first step towards faster and more efficient payments in the US. Unfortunately, the current framework does not address the other most pressing issues in the US payment system. By not including non-banks and cross-border payments, FedNow puts itself at risk for success and doesn't take into account the needs of US customers. Now, I know somewhere somebody recently posted something I think they asked a question to Valente, asking them, or it was either FedNow or Valente, asking them if they are actually utilizing RippleNet technology currently in that system. And they said, no, as of now, we are not using XRP. We know they're Ripple enabled. We know that they have the ability to use XRP basically, boom, at the drop of a hat. So they're not using it now. And maybe this is where this opinion is coming from. Little do they know, they are enabled to utilize Ripple technology, and they can interoperate with all these institutions that this article is questioning. The Federal Reserve, U.S. Treasury, White House, and other leading government bodies have identified fixing cross-border payments as a priority, and with good reason. They're slow, costly, inconvenient, and lack transparency. Despite this prioritization by financial decision makers to identify and solve problems with international transactions, the FedNow launch will not include cross-border payments. Well, at least not yet. Okay, and maybe this is where they're getting all tied up. They have the ability to, as we know, leveraging Volente, runs on Ripple, but I have a feeling, these things take time, and this is why we're even seeing the ISO 20022 standard being rolled out in phases. As much as we want it to be, I don't think it's going to be this flip the switch moment where everything just kind of switches over and it's going to be different. You wake up one day and everything is different. I don't think that is a very prudent way for these guys to do this. First of all, and it just likely won't happen that way. I think eventually we'll get it in dribs and drabs, and maybe this is why we're seeing this criticism of the FedNow rollout. Remittances are a lifetime. Okay, so it just continues on by saying how important remittances are, how important cross-border payments are. As we all know, they're critical. Service members stationed in foreign countries, small businesses, so on and so forth. So again, not addressing the deeper issues. The fact that we know FedNow is indeed involved with Volente. Volente does leverage RippleNet, and although they are not using XRP today, they certainly do have the ability to. So the opinion piece maybe should have been researched a little better. Just my opinion. Nevertheless, wanted to thank Matt for posting that, guys, because as we're looking into this more, as we're doing more research, we are noticing changes are happening, and the Democrats are asking for change, okay? Elizabeth Warren plus Dems asked the CFPB to revise this section of this document here for remittance fee disclosure up front. So you know what this means? When rule was proposed, Ripple and XRP were listed as making this possible. So get this, here's the article here, and I have it up here, guys. Consumer Finance Monitor, 5 Democratic senators urged the CFPB to revise remittance transfer rule. So they sent a letter to CFPB Director Rohit Chopra to request that the remittance rule be modified to require transfer providers to disclose the true cost of remittance payments so customers can comparison shop. Basically exactly what RippleNet does. The senators compare hidden remittance fee payments fees to junk fees that the CFPB is seeking to curtail. The senators allege that transfer providers are hiding costs in inflated exchange rates or third-party estimates while advertising zero or low fees and taking advantage of the CFPB's permanent exception for the optional disclosure on non-covered third-party fees. So, companies like Swift historically have been making more money off these hidden fees, and these senators are saying, no, enough is enough, let's keep it transparent, and we want to put forth an amendment to this rule. This exception allows transfer providers to use reasonable sources of information to estimate the foreign financial institutions' fees for receipt of the wire. But what they are saying is, no, we have the technology now, and we can see what the fees are going to be exactly when we want to make that transfer. So I will link this in the description if you guys want to read the rest of this. Just going back to this tweet, though, here. So TL Benedict XRP just posting that. Also mentioning this later on in the article, unfortunately, the senators do not offer a practical solution for providing these exact third-party fees and instead encourage the adoption of new technology that would provide transparent pre-transfer cost information. And then when we go to the document here, guys, there is a solution and they give it. The Bureau has continued to monitor the remittance transfer market since the publication of this assessment report and observes that most of these developments continue to progress. Examples, and then they give some examples here, the continued growth and expanding function of Swift's Global Payment Innovation, GPI. Okay, their tracking product, which can increase the amount of upfront information available to sending institutions, and the expansion of the major payment card network capacity to support cross-border payments. So that's one not so great example. The continued growth of fintech non-bank remittance transfer providers and their further expansion into partnerships and other relationships with banks and credit unions, which allow such entities to tap into closed network payment systems that non-bank remittance transfer providers have developed. And 3, guys, the continued growth and expanding partnership of virtual currency companies such as Ripple, which offer a payments messaging platform to support cross-border money transfers, as well as a proprietary virtual currency, XRP, which can be used to affect settlement of those transfers. So boom, it has been listed as an example here of exactly the thing that they want to change here. And just another paragraph from this document, Ripple's suite of products could similarly allow banks and credit unions to know the exact final amount that recipients of remittance transfers will receive before they send the transfer. So outlining it here, exactly how Ripple and XRP are going to solve the problem if they are utilized. However, based on comments that banks, credit unions, and their trade associations submitted in response to this, the Bureau's own market monitoring, the Bureau believes it is unlikely in the short to medium term that the developments described above will be able to fully eliminate reliance on the correspondent banking network as the predominant method for banking and credit unions to send remittance transfers? Well, I mean, it could if they decided to implement Ripple and Ripple exclusively. I can see 1,000 reasons why they wouldn't want to do that. But I mean, for us, for the people, for the betterment of society, it would be a good decision. There are thousands of financial institutions worldwide that could receive remittance transfers. If, as noted above, the different approaches described above share the similarity of replicating some elements of the closed network payment system, they likely would need to enroll all or most of the financial institutions into their platforms to offer banks and credit unions upfront certainty when sending transfers for which they currently rely on the temporary exception. It may be costly, excessively time-consuming, or otherwise, because to enroll all or even most of these institutions, especially the smaller ones. So boom, highlighting Ripple here as one of the options. Clearly, number 3, the best option that they could possibly use. So will it be implemented? Will this go through? Of course, this is just a proposal for now. A positive Ripple and XRP verdict in the lawsuit will likely have something to do with this too. But guys, it's all on the table. I think it's a matter of time before we see Ripple and XRP implemented in the United States, especially for cross-border transfers and getting that exact fee amount that has been historically been hidden by SWIFT for decades and decades. More clarity for cross-border payments in the future. That's what they want. That's what I want, and hopefully that's what you want too. Tell me down in the comments what you guys think, and please subscribe to the channel if you haven't already. Like the video if you like the content I'm providing. I always love hearing your comments. See you in the next one, guys.